Thank you for joining us at XM.com for today's market comment by Rafi Boyadjian. I'm Maria Bashardis. Equities were mixed on Tuesday, while major currency pairs traded within their recent ranges, with some exceptions, ahead of the crucial CPI numbers due out of the United States later in the day. After flirting with record territory again on Monday, the S&P 500 and NASDAQ 100 ended the session slightly in the red, as the rally appears to have lost some steam, with many investors likely taking to the sidelines as they wait for the latest CPI gauge. Only a handful of Wall Street giants have yet to report their earnings, and they're unlikely to spoil what has been a solid season, as the S&P 500 looks set to post a second straight quarter of year-over-year earnings growth. The big question now is whether this upbeat sentiment will survive the CPI test. Many analysts are predicting that headline CPI will drop below 3% in January for the first time since March 2021. An upside surprise could deal a further blow to early rate cut bets, as a May move has also started to come into doubt lately. Since the January FOMC, Fed officials have been consistent in their communication that they're in no rush to start easing at a time when the labor market remains very tight and inflation has some way to go before it reaches the 2% target in a sustainable manner. U.S. Treasury yields edged back up on Tuesday after dipping yesterday. The lack of clear direction in yields has kept the U.S. dollar within a sideways range against most major pairs. The yen was on the back foot again on Tuesday as investors are increasingly taking the view that any hawkish shift by the Bank of Japan this year will likely be limited. The pound was one of the better performers against the greenback on Tuesday, rising above $1.2650, following better than expected employment figures. The UK jobless rate fell more than forecast in the 3 months to December to 3.8%, while wage growth didn't slow as much as anticipated, giving the Bank of England little reason to cut rates sooner rather than later. Meanwhile, in the cryptocurrency world, Bitcoin extended its winning streak, surging by more than 3% on Monday to break past the $50,000 level for the first time since December 2021. Thanks for watching today's market comment here at XM.com.